Those who took a risk and bought at the bottom of 2020 can be proud they made a 70% profit. Most financial analysts stay positive and believe that in 2021, the Fed's scheme, S&P 500 rising from 200 to a whole 1,000 points next year. However, this scenario has a number of risks, which I'm gonna talk about right now. Welcome to the Coin Post. So, I've been looking at predictions from Goldman Sachs, JPmorgan, and other well-known and world-renowned financial institutions. And you know what? Next year is just gonna be great, because stock prices are gonna keep rising. The numbers vary from 3,900 to 4,400 points on the S&P 500, but in general, most analysts bet on strong growth. I don't know about you, but I'm somewhat suspicious about this kind of optimism. So I suggest that today we take stocks of the past year and assess the 2021 global outlook in terms of equity investment. My thanks to each and everyone who helps promote our channel. Give us a thumbs up, please. The information you're about to hear is really important. Let's dive in. Since the last 2008 crisis until today, the key US stock index S&P 500 showed a 465% increase. As for this year, the current return since January 1st has been 16%. And those who took a risk and bought at the bottom of 2020 can be proud they made a 70% profit, which is pretty decent for the stock market. As for the dull numbers, we'll remember this year in a very different way. As you can see, back in the early 2020, S&P 500 had been growing for almost 11 years. To say that the current US stock market is overbought is an understatement. The crisis, which should have returned common sense to the relationship between the real economy and stock prices, had been in demand for quite some time. I mean, the first talks began in 2016. Then, in 2019, everyone feared trade wars between the US and China. And it wasn't until March 2020, when countries began to artificially freeze the economy to fight COVID-19, that the long-awaited correction came. But both COVID-19 and the way out of it all went wrong again. Earlier, when the S&P 500 broke through the 50 and 200-week moving averages, there would be another correction. It happened in 2000 and 2008, but 2020 changed everything, and the market showed a V-shaped recovery model. However, the drop was only 35% at the extreme point, while previous crises would end up in a 50% drop or more. And I mean, for such a course of events, unless of course you bet on the market collapse, we should be thankful to President Donald Trump and the Fed head Jerome Powell. Unprecedented support of the economy in the United States in the form of trillions of dollars and unlimited quantitative easing. As a result, we got a record increase in the Fed's balance sheet and the US public debt that went up to over $27 trillion. What's interesting is that this money was supposed to save the economy. But if you saw the statistics, you should know how many zombie companies are flourishing, living off loans and not having the means to pay them back. We also know the statistics on record unemployment and bankruptcies of businesses and households. At the same time, the stock market has grown steadily because exchanges got helicopter money instead of the real sector. In fact, what we have now is a bubble of incredible proportions inflated on newly printed dollars. This fall, the collapse could have happened again, as markets were expecting the second relief package. Because as you remember, the first one had a lot of money, but it didn't do much good, so they bet on the second one. But it was never accepted because of political differences between Republicans and Democrats in the light of the upcoming elections. And they couldn't accept it after the election until recently, because Donald Trump is still trying to keep his presidency. However, the package was signed for $900 billion. And immediately we got a new S&P 500 all-time high, which is kinda a hint of where the money would go instead of the real economy. Nevertheless, most financial analysts stay positive and believe that in 2021, the Fed's scheme, where the Fed prints, the government hands out, people buy stocks, will keep working. How strong such a position is, we will discuss in the second part of the video. In the meantime, if you're enjoying our 2020 summary, subscribe to the channel and ring the bell. You're gonna find out more precious info on investments here. These are the three main arguments that proponents of the stock growth in 2021 have. First, the Fed will keep printing dollars. Jerome Powell stated they wouldn't stop until inflation returned to its target rate at the annual 2%. So far, their efforts have resulted in inflation of just over 1%. Second, the pandemic will finally be stopped with vaccination, which has already started in the US. And Europe got also engaged. They expect the effect in 2 to 3 months, after which they predict restriction lifting. As a result, international travel and tourism might recover at pre-crisis levels, and at some point even higher due to the postponed demand. Those of you who are left without a proper vacation this year, leave a sad emoji in the comments. Third, Trump will be replaced by Biden, who's considered more loyal to China and will therefore not trigger any trade wars. This means that international trade will be working at full capacity. I mean, this theory seems to make sense, and if everything goes according to plan, we can quite easily see S&P 500 rising from 200 to a whole 1000 points next year. However, this scenario has a number of risks, which I'm gonna talk about right now. We'll start with Biden. Most analysts are convinced that he will have no problem occupying the White House after his inauguration on January 20th. But you can expect anything from the old fella Trump, so it's best to wait and then be confident. Besides, Biden himself stated that he doesn't intend to renegotiate the trade agreement with China after taking office. Which makes perfect sense, because China claims to become the top 1 economy of the world in a mere 7 years. Would the US want to give in? I don't think so. And now onto the vaccine, or rather its successful use to fight the pandemic. Can you imagine what would happen to the markets if the coronavirus stayed with us for another year or so? You cannot eliminate a scenario like this because, as you know, the virus can mutate. Furthermore, it's not yet clear how effective vaccination will prove in the long term. Things may not go according to plan, and then more countries will close their borders. And my final point would be the Fed's unprecedented generosity. There's a risk that they are already overdoing it, and if the new money gets into the real sector, inflation might exceed the threshold by many times. The agency will then have no choice but to hold it back, which means raising the interest rate and stopping the securities buyout. As a result, markets are left without liquidity, and they begin to panic, collapse and then die. Especially if there's a wave of bankruptcies of zombie companies that depend on loans and government grants. And mind that if for some reason the crisis starts to intensify, the Fed and other regulators have virtually no tools to contain it. We already have zero rates and the money printing machine is running at full capacity. But let me remind you that this is not a financial recommendation, it's just my point of view. I'm not predicting a stock market crash, but I think it's important to draw your attention to the risks, so that you get prepared in case things go south. Make sure you subscribe to the channel and ring the bell to stay up to date. Share this video with your friends who also invest in stock. I wish you only profitable deals and low taxes. And that's it for today. Thanks for watching. It's the Coin Post channel. Subscribe and get enlightened.